we're going to uncover the secrets of the cup and handle chart pattern, a powerful bullish continuation pattern that can help us identify potential profitable trades. So, let's dive in. The cup and handle pattern is visually distinctive and easy to identify. It consists of two parts: a rounded cup shape followed by a smaller handle formation. The cup represents a temporary pullback in price, followed by the handle indicating a consolidation phase before an upward continuation. Now, let's explore the secrets of this pattern. Look for a smooth, rounded bottom in the cup formation. The cup should have a U shape, indicating a gradual recovery from the previous downtrend. Avoid cups that are too shallow or V-shaped, as they may lack the required depth for a reliable pattern. The handle should ideally be small and downward sloping, indicating decreased selling pressure. When trading the cup and handle pattern, it's crucial to follow certain do's and don'ts to maximize your chances of success. Do look for an increase in volume during the cup formation, indicating accumulation by buyers. This volume surge confirms the pattern's validity. Confirm the pattern with a breakout above the handle's resistance line before entering a long position. Set a stop-loss order below the handle's support level to manage risk. This level acts as a safety net in case the price reverses and invalidates the pattern. Don't enter a trade too early, before the breakout occurs, as it increases the risk of a false signal. Also, avoid entering trades when the overall market sentiment is negative, as it can impact the pattern's accuracy. To effectively trade the cup and handle pattern, wait for a breakout above the handle's resistance line. This breakout confirms the pattern's validity and provides a potential entry point. Consider placing a target price by measuring the cup's depth and projecting it upward from the breakout level. This estimation helps identify a potential price target. To enhance the accuracy of trading this pattern, look for additional confirming signals. Pay attention to bullish candlestick patterns that occur near the breakout level, as they strengthen the bullish bias. Additionally, consider using momentum indicators to identify bullish divergence, where the price forms higher lows while the indicator shows lower lows. Combining these signals with the cup and handle pattern can increase the reliability of your trades. Remember, practice is key to mastering this pattern. Analyze historical charts and study real-time examples to gain familiarity. Be patient, wait for strong confirmation, and practice proper risk management to minimize potential losses. If you found this information valuable, please like this video and subscribe to our channel for more engaging content.